All right, so I think we can make a start. I'm sure a few more folks will join us, but thank you so much to all of you who already have. My name is Shari Parvarandeh. I'm an associate partner here at Innosight. I'm based in London. I'm joined by my colleague Pontus Siren, who is a partner at our firm based in Switzerland. And we're really excited to be here to talk a little bit about how global companies can overcome barriers to scaling innovations across the countries and regions that they operate in. Pontus, I don't know if you'd like to add any opening remarks.
Yeah, it's an interesting question, an interesting problem of how do large global companies unlock this hidden potential that we often find in these organizations that typically innovate in silos and don't really have a systematic way to scale those innovations across their regions and across the globe. So it's an interesting question. Look forward to unpacking it with you, Shari.
Great. So Meredith, maybe you can just advance the page here. Just a few very quick housekeeping notes. So the session is being recorded. You will receive a link to the recording, and the materials that we're sharing on the screen here follow to the session. We would really love to encourage active participation via a couple of polls that are going to appear on your screen throughout the session. And we'd also encourage you all to, exchange ideas and experiences as you deem fit using the chat function. We will try to monitor that, Pontus and I as well, though we might not be able to respond to every comment that's entered. We'd really love for this to be a meeting of minds beyond just our own on what is an exciting and complex topic. So please do feel free to share perspectives. All right, maybe we can advance the page.
Yeah, and just to kick it off, Shari, perhaps you could articulate the challenge that we're addressing here. What do we mean when we talk about overcoming the barriers to scaling innovations globally, and why is it important? And I think it'd also be instructive to the listeners and participants if you could share the backstory about how did we start thinking about these challenges, and what was the origin story for some of this thinking?
Yeah, and I think sharing sort of a real world example of the challenge is a good way to start to bring it to life. So the example company that we can talk about here is a global retail bank. And that global retail bank has 3 key regional business units, and it has strategy and innovation capabilities distributed across each of those business units. And all 3 of them were putting out some really exciting new products into the market just a couple of years ago. So for example, the US business, the North America business, had launched a smartphone app that let customers withdraw cash from an ATM without having to have a bank card with them. You can just use your smartphone in order to do that. The Europe business had developed a mobile-only savings product targeted at younger consumers. And the Asia region had developed a robo-enabled, AI-enabled investment advisor. So you've got this really innovative global organization developing exciting customer-centric products that are really sort of on the cutting edge of its industry. Now, you might ask what the challenge was or what the problem was, and that is that none of these 3 products that you see here on the screen had left their home region. So the smartphone cash withdrawal app was successful, but only in the US. The mobile savings product was doing really well in Europe, and the robo investment advisor was also confined to Asia. And the CEO of this organization put it really well when he told us, per the quote at the bottom of the screen here, there's so much new product innovation happening in each of our regions, but I have to go and knock heads together to get them to market each other's new product ideas, even though those new product ideas clearly offer significant growth potential across the globe.
Yeah, that's a typical challenge that you described, and one solution might be just to centralize innovation and push the products and services out to the regions, but that's not really what we're talking about here.
Yeah, I think that's right, and that could be a knee-jerk response to this type of challenge. That said, the problem here isn't really that decentralizing strategy and innovation in big global companies is a bad thing. Actually quite the contrary, because there are significant benefits to distributing innovation across the world. One is that if you distribute innovation, companies can actually innovate more and more successfully, because in so doing that, by distributing innovation, they can access a greater breadth and depth of innovation talent that exists in different markets. They're closer to their customers and can access a greater, diversity of customer insights, understanding more deeply and broadly customer needs, and also inspiration that might come, from just the diversity of being in different parts of the world. So actually, you can have a much more vibrant and bigger innovation pipeline as a result of distributing that function globally. The problem is really one that arises when innovations born in one region do not leave that region and stay in the region that they were born in. And you kind of alluded to this, Pontus, that the story of the bank here is by no means unique. And this is a really common problem that we encounter in global organizations across industries. So the opportunity is really to empower regions and the enterprise as a whole to benefit more fully from the geographic reach that they have, which should be an advantage for innovation, because new products that originate in one part of the business should be scalable to others as well.
Yeah, that's really interesting. And there's this hidden potential that you're describing that these big organizations aren't systematically harnessing when they struggle to scale these innovations across regions. And the topic of this discussion is really about how do you harness that hidden potential? And of course, it is a balancing act. Local innovation is of course important, and sometimes they don't scale for good reasons. But then there are these innovations that really should be scaled globally, or at least in parts of the globe. And that's where there's really value that's potentially left on the table. Is that right?
That's exactly right. And, the message shouldn't be that everything needs to scale. Local innovation for local markets is really legitimate and really important. What we are saying is that we do want to unlock value from scaling innovations globally where that value does exist, and where an innovation shouldn't just be staying in a local market.
Okay, makes a lot of sense. Meredith, if we can advance to the next slide, just to orient you a little bit about some of the next topics that we'll cover here. We'll talk about the common barriers to innovation, to scaling innovation globally. We'll talk about some of the, and then we'll talk about the solutions to those barriers. So we'll kind of identify what's stopping companies from doing this, and then what can leaders and executives in these organizations do to unlock this hidden value. And let me hand it back to you, Shari, to share with us what are some of the benefits for scaling innovation globally. And Meredith, if you could advance, we should be on slide 4 here. Yeah, yes. There we go, Shari. Over to you.
Yeah, if we can advance the page just by one, Meredith. There's 4 benefits that we wanted to tee up, and all 4 of them are really quite significant. The first is about growth. So, companies that funnel new products that originate from one region into their global distribution channels can just unlock greater growth from those products. So referring back to the bank example from earlier, that bank could also offer the robo-investment products developed in Asia to customers around the world. And if it doesn't do that, it's just missing a growth opportunity. Also on the issue of growth, and this is a little bit more nuanced, doing things at scale, in other words, with the resources of a global organization instead of just one of its regions, that can often result in better and more competitive products, which means more growth. So taking again the robo-investment product from the bank, that product might be an even better product and an even more competitive product if its underlying technology and data assets were developed and leveraged on a global scale instead of just with one region's resources. So in other words, a region itself might be able to build a good enough product on its own, but the global organization harnessing its total resources might be able to build really a world-class one that might be able to grow more than just one that's developed with a regional resource pool. The second benefit is about lower innovation costs. And if regions are scaling innovations to one another, they are collectively lowering the total number and therefore the costs of innovations that each one of them needs to generate in order to satisfy its growth goals. So every region is going to have a certain aspiration, a certain targets for growth that it wants to deliver from innovation. That's going to require a certain number of new products and services. If they are exporting and importing from one another, they're lowering the total number of new products and services that they collectively have to develop. They also reduce costs even further if they avoid duplicating spend on similar innovations. Now, that might sound really, really basic, but actually we see this happen really often, that you've got a global organization that has multiple regions duplicating spend on the same type of innovation, very often unknowingly, and in sort of absence of knowledge that other regions are working on the same priorities. The third benefit is stronger innovation capabilities. So we very often find that companies that do take a global approach to innovation build stronger capabilities for producing innovations. And that's because in the process of exporting products and services, processes and best practices for innovation also get exported as a byproduct. So just to bring that to life a little bit, if the bank in Asia were to export its robo investment advisor products, it would also likely be exporting learnings about, innovation methodologies that it applied and developed to develop that product, insights about customers and their needs that it learned in the process of developing that product to the other regions as well. And then the final benefit here is a really interesting one. So improved corporate management and investor growth story coherence. If you think about what happens in the absence of global scaling over a long-term time horizon, i.e. of multiple years, a lack of innovation global scaling means that regional businesses that might have started out looking exactly the same end up looking more and more different as a result of building different portfolios of products and supporting capabilities. So you might have had a situation in which, the bank 10, 20 years ago was offering the same current accounts, the same savings accounts, the same mortgages, of course, slightly tailored for the, markets that they're in, but fundamentally the same product portfolio. Over time, if you're not globally scaling things, the product portfolios of each of the regions can end up looking really, really different. And that just makes the corporation as a whole more complex and difficult to manage. And it also makes it harder for shareholders to understand, the corporation's growth narrative and growth prospects. So better global scaling really helps to mitigate that.
That's great. It's a great summary. And this hidden potential that we've been talking about can be quite significant in some circumstances, that there's many sources of value that are at stake here, and ranging from greater growth opportunities to lower innovation costs, to greater innovation capabilities. So it is an interesting set of value levers that companies and executives can consider. And at this point, we'd love to hear from the audience, and we'll go to our first poll. Meredith, if you can advance to the next page. We'd like to ask you, based on these benefits that we've discussed, how good do you think your organization is at innovation and global scaling? And to what extent do you think you're maximizing the benefits of some of the value levers that we've just discussed? So you should see the question and the options on your screen. So just please take a moment and give your answer, and then we'll take a moment and we'll discuss the results.
Just give a few more seconds here for final results to come in. Good. Meredith, can we share the results on the screen?
Okay, interesting. There's kind of a somewhat even split, although the ineffective category seems to be bigger. What do you think about these results, Shari? The numbers are relatively small, but what are your reflections?
Yeah, well, so firstly, pleased to see some organizations are doing this well, and know that, you know, the issues of how we deal with siloing and creating a culture of collaboration has been a hot topic in recent years. Still unsurprising that the majority, you know, is sort of skewing towards the ineffective, you know, part of the spectrum, and not surprising, and you're not alone. Like we said sort of earlier, this is an issue that we encounter in many, if not frankly most, global organizations that we work with.
And of course, part of the challenge is that you don't always know how much potential there is unless you really analyze the system and analyze, you know, what other regions are doing. So it's often hard to know actually, you know, how good you are at scaling innovations globally. And I think that's part of the challenge. You don't know really what good or excellent looks like in this exercise. So we typically find that as companies start to look at this question, they discover more potential and more opportunities than they perhaps initially thought. And it's partly because they didn't look at the question in a systematic way across the entire globe, that they didn't discover some of these opportunities that turned out to be quite high value, as Shari shared in his example of the bank in the beginning here.
Yeah, that's exactly right. And one of the barriers to more global scaling happening that we'll talk about in just shortly here is that actually it's not always clear how much opportunity there is for that, and regions don't have enough insight into each other's portfolios and pipelines to know that there are really exciting opportunities to import and export things.
Excellent. Meredith, if you can move forward, let's start to talk a little bit about what gets in the way of global scaling. There's clearly value in doing this. So the question becomes, why don't companies do more of it? And I guess the first thing to highlight that it is a system level problem. And there's many issues that are intertwined and interdependent and that stop from companies from doing this effectively. We won't discuss all of them in any great detail, but Shari, if you can kick us off and just talk about the most common ones that we've seen.
Yeah, absolutely. And these really are, you know, three of the common ones. They're not, they don't entirely explain, you know, why global scaling doesn't happen as much as it should within every organization. The barriers to that are quite circumstance specific, but of the three that we see quite commonly, the first is what we call the illusion of local uniqueness. Now, illusion's a very you know, strong and evocative word. It's true that regional business units operate in distinct market environments. They have distinct local customer needs. They have distinct competitive environments, regulatory, technological environments, and infrastructures, etc. So to the point that was made earlier, local innovation for local markets is really important. But in our experience, we often see that local leaders within each part of the business perceive their part of the business to be actually more unique relative to the rest of the company than it actually is. And this sort of perception and sense that, you know, our region is a unique butterfly that the mothership doesn't understand, that is really different from the other regions, can prevent those leaders from even sort of, you know, looking to see what other opportunities might there be to import innovations from other parts of the world. So that's the first of the barriers, illusion of local uniqueness. The second challenge is misaligned incentives. And regional business leaders are quite rightly measured and incentivized to grow their own business units. Now, the flip side of that is that they might not want to spend time and resource on exporting their innovations for the benefit of other regions, because if I spend incremental time and resource doing that, it just takes away from my ability to deliver for my own region. The other side of the equation, and this now speaks to the motivations of potential importing regions, sometimes those regions might have what we call a not invented here mindset, and just a desire to demonstrate their ability to innovate really independently without input and without reliance on other regions. So there are both formal and informal incentives at play on both sides here that can prohibit global scaling. And the third issue that we'll flag is the lack of transparency. So this is the point, Pontus, that you were alluding to just on the previous page, follow to the poll. Surprisingly often, regions don't even have enough visibility into each other's innovation pipelines to know that there are opportunities to import things from one another. And without that, it's actually really hard, I mean, frankly, impossible to import something that you don't even know that it exists. And you also might need to know it exists sometime in advance of being able to import it, because you need to integrate that opportunity into your strategic and financial plans and make sure you're able to properly resource it as an importing region.
Yeah, that's great. That's a great overview, and brings us nicely to our second poll question. I mean, as we said earlier, it is a complicated problem, and it's a system level problem, and many of these barriers are intertwined and interdependent, and they play out to different extents in different organizations. But again, we'd be curious just to get the audience's quick pulse on which one of these three might be the biggest barriers to global scaling in your organization. And Meredith, if you advance one slide, we'll get to the poll. And again, you've got the question on the screen there. We'll give you a few moments to reply, and we'll chat about the results then.
Just give a few more seconds for anyone who hasn't responded to do so if they wish to.
Okay, an even split. It seems that at least this audience is quite evenly split on what the main challenge is: illusion of local uniqueness, misaligned incentives, or lack of transparency. Scored, almost neck to neck. Thoughts on this one, Shari?
Yeah, I mean, look, often these things all exist together at the same time. I mean, sometimes it might be the case that actually there's a fairly good system in place, and there's just one issue which might be around the lack of transparency, which is really inhibiting, maximum impact from global scaling. But very often it's these three, plus also sometimes other circumstance-specific barriers all at play together.
Yeah, that's right. And of course, a common one is that people often lack time. And so they don't necessarily have the bandwidth to look at what other parts of the organization are doing, or what the results are, and so on and so forth. So these questions are really, or these challenges are really intertwined, and getting to the root cause, can be challenging. But all of these are good, good places to start if we want to think about how do we break down some of the typical barriers to global scaling. And maybe, Shari, we go to the next section. Meredith, if you advance one slide for us, how do we address these barriers? How do we break these some of these barriers down?
Yeah, so let's start with the illusion of local uniqueness, which was the first barrier. So we'll restate that regions often do have, really important differences from the point of view of external market circumstances and also internal business circumstances, that mean the last thing we want to do is create a one-size-fits-none innovation pipeline. Having said that, we really often find that when regional leaders do challenge the assumptions that they might have about how unique their circumstances are relative to one another, they actually find that they have much greater strategic commonality and scope for collaborating and importing from one another than they might be realizing at that moment in time. So the way to overcome this barrier is for each of the regions to define what we call its strategic focus areas for innovation. And here the ask is for each of the regions to really articulate what are the large, profitable, growing customer groups, customer needs and also broad solution types that they want to point their innovation efforts towards in accordance with their own local market conditions and business priorities. Now, once each of the regions do that, you can kind of look across them and identify commonalities in the strategic focus areas. And where you've identified that a strategic focus area is shared by 2 or more regions, what that means is that an innovation that belongs to a particular strategic focus area, agnostic of which region it originates in, that can be identified and determined as relevant to all of the regions that have that strategic focus area. So just for example, coming back to the bank from earlier, if in the process of developing their SFAs, each of the bank's 3 regional businesses developed one that was focused on helping millennials, bank on the go through mobile-only solutions, then the savings product that was developed in Europe would have been, really clearly identified as something that could be exported to the other regions as well. Pontus, don't know if you've got anything to add here.
Yeah, no, that's an interesting point, and the SFA construct in some ways is a common denominator or common language, and it forces folks in different parts of an organization to really clearly articulate, what is the customer type or the customer archetype or the customer segment that we're thinking about here. What types of jobs to be done or problems does this solution address, and how does the solution address those problems better than the competition? And when you have this common language, it becomes more clear to other parts of the organization, and they can determine, is it applicable in their region?
Yeah, and the construct itself is a really powerful one because it's almost a forcing function for customer centricity. So the idea that we don't want to create a one-size-fits-none innovation pipeline is mitigated by the fact that you've got a framework for defining each of the region's innovation priorities in a way that really puts the customer and what we call the job to be done, the important unsatisfied need, at the center of the region's innovation efforts. Good. So maybe we can move on to the misaligned incentives barrier. So the question here is really, how do you motivate regional leaders to invest their time and their resources to export innovations from their regions to others for the benefit of those other regions? And there's, a couple of ways of doing this. So one is that regional executives can be motivated to export in part through financial incentives. And then what you might do is think about the in-year cash bonuses that regions tend to get for meeting their own regional innovation targets. You might have a component of that which is driven by the volume and impact of innovations that they have exported to other regions as well. In addition to those existing metrics like, in-year own business unit or own region growth. So you're not just recognizing business leaders for the growth they deliver from innovation in their own regions, but you're also counting growth that their innovations deliver in other innovations as well, in other regions as well, and rewarding them for it. And really importantly, this also helps sort of create and reinforce a culture of global scaling and collaboration in which global scaling behaviors come really naturally to regional leaders because it's consistent with their incentives and their motivations. And you can have a situation in which enterprise level executives across the regions are further bolstering that culture by really publicly championing innovation, export and import success stories and celebrating those global scaling success stories. Pontus, anything to add?
Yeah, no, that makes a lot of sense. But to be fair, the incentive part of this equation is probably the toughest one. Yeah. Because scaling globally and incorporating those incentives into the other incentives that executives in the different regions might have is difficult. And you don't want to over-index, in this part because it is still not as important as driving the core business in the various regions and countries. So finding the right balance is challenging. But we would say that this is something that executives have to focus on, and you have to get this right enough. It doesn't have to be perfect, but it has to be right enough so there is enough incentive for executives in the different parts of the organization to share and to leverage the insights and solutions that their colleagues have developed.
Yeah, I mean, I think that's really well said. And what we're trying to do here is really create a win-win situation for importers and exporters. And of course, there's going to be different ways of doing that through different incentives that will be appropriate in different circumstances. Good. So let's move on to the final component. And this relates to the lack of transparency barrier. So the issue here is that regions often just don't have enough visibility into each other's innovation pipelines, meaning that they actually don't know what opportunities to import things are out there. So overcoming this barrier, which I know from the first poll is an issue, or actually the second poll is an issue for some of the folks on this call, that requires a really rigorous, centrally coordinated innovation portfolio management system that profiles and tracks innovations originating in each region through the stages of the innovation process. In other words, from initial opportunity spotting through to solution development, de-risking and piloting, and then finally market launch and scaling. And the idea really is that having regions feed data on their innovation pipelines into that central portfolio management system not only creates visibility that lets all of the regions collectively identify opportunities to import from one another, but it also reduces the risk of duplication of efforts that would happen if regions unknowingly work on similar opportunities simultaneously. And we see this happen really, really frequently. That greater global innovation pipeline visibility also empowers importing regions to plan their budgets, their annual budgets at the start of the year, such that they can allocate resources to the most attractive opportunities for driving growth, no matter where they come from, whether it's in their own pipelines or opportunities that they're seeing come from other regions as well. So those are the three solutions that we wanted to share. Of course, really, really complex set of barriers. These are just three elements or three potential interventions. There might be others as well that are appropriate for different circumstances. If we advance the page, and we don't have too much time, but did just want to say a word or two about a couple of organizations that we think really demonstrates the value of innovation global scaling. And these are from really different industries and have really different circumstances. But starting with Lindt, and this is the Swiss chocolatier, a huge amount of global scaling happened under the leadership of Ernst Tanner, who was their CEO from sort of 1993 through to 2016, and is still the company's chairman to this day. And the products that you're seeing here on the left-hand side of the page, things like the dark truffles, things like the Lindt chocolate bunnies, these were developed across countries, including Switzerland, but also France and Germany and others as well, and were scaled really, really systematically and really deliberately to global markets and funneled through the existing distribution footprints that Lindt had across the world. And that drove incredible performance over a 25-year period. You know, share price growth in the double digits, compound annual growth rate over that time period. On the right-hand side, here you have the Worth Group, which is a really fascinating company. So this started off really humbly in the 1940s as a single man selling metal screws. Today, it's a 17 billion euro company that's developed a portfolio of industrial businesses and scaled all of them across the world. And per the numbers at the bottom of this chart, again, really, really stellar performance. I mean, driving double-digit revenue CAGR almost every single year over the last 50 years is something that, you know, very, very few companies can claim to have also done. And you can also read a little bit more about these two impact cases in the executive briefing paper, which we published on this topic. So with that, Pontus, maybe I'll hand it back to you on the next page just to summarize and close the session.
Yeah, thanks. And there are really two key messages we wanted to share and discuss with you in this short webinar. The first one was that there is significant hidden potential that global companies or large regional companies can unlock by systematically scaling innovations across regions. And the second point was that there are clear and common barriers that prevent companies from doing this. They are often complex and manifold, and they require a system-level approach, but those obstacles and barriers can be addressed, and companies can become much better at scaling innovations globally. So we hope you found the discussion and the examples and some of the barriers and solutions we shared thought-provoking and interesting, and I wanted to thank you all for joining us this morning, afternoon, or evening.
And we do have a executive briefing on this topic. It is available via innosight.com. Please do feel free to download it. Also, of course, very welcome to reach out to Pontus or myself should you have any questions or wish to discuss the topic further. And with that, we will wish everyone a great rest of their day.
And a happy holiday season to all.